Hello traders, and welcome to a new day trading strategy of mine. So in today's video we'll be talking about the Directional Movement Index, also known as the ADX. And we'll be talking about the three main ways that you can use this for profitable trading. Alright, so let's begin. So what is the DMI? So the DMI is an index that shows you bullish and bearish pressure, and also at the same time it shows you the market state. So with the values that the oscillator has from 0 to 100, certain values indicate that price is consolidating, and then other values indicate that price is breaking out or beginning a new trend. So you can think about it as an upgraded RSI, or an RSI with more detailed information. So here are just some rules that you can use when you're looking at the ADX and also looking at what price is doing with the ADX. I know this seems like a lot, but this will make a lot more sense. It will be a lot easier to interpret when I start to show you the visuals. But if you want, you can pause the video and read this over. All right, let's keep going. So as I had said before, whenever the ADX crosses above the 25, typically that indicates the beginning of a new trend. So you can see here that we had the uptrend that began, and then it slowed down for a bit and was weak, as you can see here, with the ADX falling. The ADX is that black line you see there. And then you can see that the trend picked back up again, and the ADX grew above the 25. You can see that happen as well here. And then the trend was quite strong. Here you can see that the ADX did attempt to go above the 25, but then ducked right under afterward. And typically we want to enter into the new trend when the ADX enters above 25. But you might be wondering, wait, so like half of these examples you would be out of profit because you'd just be buying and selling or selling and buying because of all these whipsaws. Well, that's true. And that's why the Directional Movement Index actually has two other indicators onto it. And it actually looks like this, with the green and red lines. And that's going to tell you when you should be buying and when you really should not be buying. But this, to start off with, is the ADX, which is showing you the market state. So when price enters consolidation, typically it will fall below the 25 value. So if you look just on this example on the hourly for Bitcoin, you can see that when the ADX fell below 25, price was consolidating, as you can see here. And then that consolidation stopped occurring when the ADX grew above the 25. You can see that again here. ADX falls below 25 right here. Price just begins to go upward a bit and then consolidates right there. And then price stops consolidating when the ADX starts to approach the 25 again. And that happens again here. As you can see, ADX falls below 25, and you see that consolidation right here, where the price isn't really trending upward or downward in this range right there. Yeah, and then there's also price ending a trend. So this one doesn't happen as often, but when it does, it's a very reliable signal. So when the ADX goes above the 50, and again, this is an oscillator that oscillates from 0 to 100. So the 50 line is pretty important because that's halfway up the 0 to 100. But you typically will almost never see the ADX go above like 70 or 80. And you can see that when it does hit 50, that typically indicates that you're overbought or oversold. And as you can see here, price did turn immediately as we were oversold here. All right, so now that was the first example of showing how you can use the ADX to gauge the market state, to see if we're entering a trend or see if we're consolidating and using that. But how can you use the ADX to actually make money? That's probably why you are watching this video. So what we want to do is trend trading with the DMI. I know I'm throwing a lot of acronyms at you, but that's just how this indicator works. So there are three main acronyms that you need to know. There's the ADX, which is the black line. There's the DI, which is these. This is the green DI, as you can see, minus DI and a plus DI. So the green is the plus DI, and the red is the minus DI, and then this is called the DMI altogether. If that makes sense. Yeah. So what we want to do is we want to buy if the plus DI is above the minus DI and the ADX. So this has to be above both the minus DI and also our trend indicator. And the reason that is because typically when the ADX is below 25, we know that the market's probably consolidating. And when the market consolidates, it's either accumulating positions or distributing positions with accumulation or distribution. And if price is accumulating, typically you're going to see that the green DI is above the red and the black, as there's more bullish momentum, which will show you that price is more likely to move upward. If you're in a distribution stage, or also known as when a lot of people are selling in consolidation, then what you're going to see is the red DI is going to be above the plus DI and above the ADX line. And that would be your trigger so that you could buy or sell when the trend is emerging out of consolidation. All right? And then again, you want to take profit if two things occur. You want to take profit if the ADX does reach 50, because that's a pretty important number for the indicator, or more likely if the DI cross again. So let me show you what that means, because that might not make total sense just by looking at this. So let's talk about it here. So if we look here, and we don't know any of this information, we just know how to use the ADX and the DMI. We can see that the green DI is above the red DI and above the ADX line. And because of that, we know that this market state right here is probably quite bullish. So what we're going to do is we're going to wait for the ADX to cross above the 25 line. And that happens right here. And when that ADX crosses above the 25 line on this candlestick, we want to buy. And then again, we're looking to sell either when our green DI, because we're in an uptrend, we're looking at the green DI, either crosses below the red DI, or even better, if it does happen, that our ADX line goes to 50 or above. And in this example, you can see that we would have bought here using the ADX of around 5,900, maybe a little bit higher. 59, maybe that'd be like 5,950. And we would have sold it around here at around 6,150 because our ADX was right there. We could also maybe have held this position until green DI crosses, as you can see, below the red DI. But it would have been much better just to use the 50, as you can see here. All right, let's look at another example just to make sure that you guys know what this is. So here we can see that the market was consolidating. And we're asking ourselves, is this accumulation or is this distribution? Remember, accumulation, people buying, price is going to go up. Distribution, consolidation, people are selling, price is likely to go down. So this is distribution, and the reason that was is you can see that the red DI is beginning to become above both the ADX and the green DI. So we know that we're probably going to be in a bear market. And we can see that right here, that the red DI crosses above the green DI. You can see that it was choppy here, so we don't want to do anything because this is normal. But when this begins to significantly cross above, we know that we're probably entering into that bear market. And our confirmation occurs when the ADX, our trend indicator, crosses above that 25. And now we want to short or sell our position. If we had shorted here, we actually would have had a really nice profit here because the ADX does reach 50 and then goes back down. And when the ADX reaches 50, we could have gotten out of our short around 3,200 from around 4K. Or, again, we could also get out when the red DI crosses under the green DI, which shows that the trend strength is changing. And that would have been right here. So this would have been a very good selling area. So one last signal that I just want to show you guys here. Green DI is clearly above red DI and the ADX. So let's look right here. You can see that's happening. We have that consolidation phase, as you can see, and we're curious if price is going to go down or up after consolidation. And price goes up a bit, and we want to make sure that we're confirmed by our ADX and our DMI. And we are. We can see that the green is above both the red DI and the ADX line, and then the ADX line crosses above 25. And that would have been our buy. And we would have bought it around 4.5K. So 4.5K. And we would really have no reason to sell this. The DIs almost crossed, but they don't. So we don't want to sell here. And then we can see that eventually the ADX reaches that 50 line again, and we want to sell right there. So we would have made a profit of around 4.5 to around 5. I'd say 5.7K. So that's around 1.2K, which is I think like 20% profit in around like 3 or 4 days. So that would have been a really nice profit just using the ADX on the hourly and just looking at trend strength and looking at when the market state's likely to change. So this is just another example that you can see. And one thing that you might be curious about, which is understandable here, is this would have actually been a minor sell signal. If you look here, we can see that red DI is above the green DI and above the ADX, which showing that the bears are quite strong. And then when this crosses above 25, you actually maybe even could have sold here and then bought back at this crossover for a little profit. That's just an extra example if you are curious. So the last thing that I want to talk about is divergence. This one's a bit tougher. This one is, I'd say, pretty straightforward with this is what you do. This is how you enter into a downtrend or enter into an uptrend after consolidation. Divergence is a little bit trickier, but if you do understand RSI divergence, then this probably won't be too hard for you. So these are the rules for looking at divergence, and let's get started. So when you're looking at any type of indicator divergence, whether it's RSI, MFI, or whatever, or here in this case, this would be DMI, you want to look at when price makes a new high, what does my indicator do? And that's all. So you can see here that price made a new high clearly. We're in an uptrend. Price goes from this high to this high. But look at the green DI. Our DI goes from here to here. And if that's not enough, let's see it again. We can see that from this high to this high, our green DI goes from here to here. That's really not a good sign. And then look what happens. Market goes way down. And as the market goes down, you can see that the red DI is increasing, which shows that bearish momentum and also known as selling pressure is increasing as well. Now let's look at one more example of divergence, but this time on the flip side. So you can see here that price goes down a bit, and you can see that as price goes down, red DI goes down. And remember, the red DI is showing us how strong the selling pressure is. So we would expect that that would probably increase when price went down, of course. But it doesn't. It actually decreases here on this low, from this low to this low. And then if we do one more, from this low to this low, price makes a lower low. DI decreases a little bit more. So from here to here. So that would probably be a pretty good buying opportunity or getting out of your short opportunity because the market's probably about to flip. Yeah. All right, so one last thing that I wanted to just add to this with using the ADX and using the DMI. You can actually see that I disabled my ADX for just a little bit. You can also add alerts to the ADX, and this is actually where this strategy is can become much better than other strategies because you can do it this way. So what we can do is actually we can hit alerts on Tradingview. We hit DMI. I have a 1425. We hit DMIs twice. And we can do whatever we want. We can say, hey, if the plus DI crosses the ADX or whatever. But I like to say if these cross each other, alert me. So what you want to do is if minus DI crosses plus DI crossing, this is what it should look like. Hit create. And of course your time frame as well. I'm using the 15-minute. And what this is going to do is that this is going to notify you whenever the DIs cross in real time. So I just hit create, and you can see that right there. Boom. And my alert log is up, as you can see there. So if these were to cross, I would become, I would be alerted to it. And what you can do with this is you can go to your watch list and you can add a lot of alerts with using the Directional Movement Index. And you can just send an alert for every single one. And then that way, and you'd probably want to do it on the hourly because if you did it in the 5-minute, you'd get an alert like every 5-10 minutes. But on the hourly, it would be a very good alert signal. Because then you could be alerted whenever the bullish and bearish pressure is changing when one crosses over the other. And then you could act accordingly and maybe enter a trade. So yeah, that's going to be it for just this short video on how to use the DMI and how to use the ADX. I really like using the ADX and the DMI. Even though it's a little bit more complicated than just standard RSI or MFI, I think that it's a fantastic all-round indicator that can be used on most assets. I actually began using this indicator when I traded Forex and when I was trading stocks, and then I moved it over to crypto to see if it worked, and I saw that it worked really well. Especially when I changed around the settings a bit to make the DIs 25 instead of 14. So yeah, that's going to be it for this video. If you have any comments, leave them below. Have a good day.